Hi, everyone. Welcome to the TimingResearch.com crowd forecast news for June 26, 2023. We are recording this at 1 p.m. Eastern Time, and this is episode number 391. My name is David Cosmoter. I'm the creator of Timing Research, and today I've arranged for Norman Hallett to join us, and you should be seeing his screen right now. And the option professor is back to moderate, so I'm going to go ahead and turn it over to him.
Okay, well, we just came off of a little bit of a dip last week, and we've got 4th of July coming up, so there's quite a bit going on. PC index is coming out this week in durable goods, so got a lot of stuff that's going to hit the fan. Norm Hallett is with us today. He's going to share ideas on a number of things, including the Japanese yen. But before we get started, Norm, a quick background on yourself and what's going on at your company.
Yeah, I'm, thanks, Jim, and sure. Really always great to be with you because I have a certain look for the options, and that's your specialty. So I always like to hear your counters to some of the things that I'm saying. Sometimes, it's very, very helpful to me. You probably don't even know that. Anyway, I'm the first. I've been doing this just over 40 years. The first 20 years of my career really was primarily in options, but also in the writing trading plans for professionals and so on. That and my reputation was simple trading plans. That's why generally I would take somebody's trading plan and try to reduce it and take things out rather than put things in. Most too many redundancies. I think you're looking at my charts right now. You can see how simple my charts look. But the last 20 years, really, I have spent time in an area that most traders avoid, and that's looking in the mirror and wondering why they have a pretty good trading plan, but they're still losing money. So that's the mental and emotional part. And people see me enter the room, they kind of get shy and go over to the bar, and they don't want me to say, "Hey, how's your discipline doing?" Because everybody seems to put that on the back burner, and that's why only 10% of traders win. But recently, the last 4 or 5 years, actually the last 2 or 3 years, I've had a particular love for prop trading, where you can trade other people's money and get as much as 90% of the profit. In fact, I'm getting 100% of the first 25,000 I make on some of the accounts that I've qualified for. So, if anybody's trading over, I don't know, 10, 15, under 10 to 15, even $20,000, it's not easy to approach, especially some of the more speculative markets. I don't know what isn't speculative anymore, but you trade futures or even options or whatever with a small amount of money. It can be tough. It can be tough on the mental and emotional part, but it can also be tough on finding the right positioning and the right and to be able to use position sizing, which I think is an underutilized thing. But the idea is that with prop trading, you can actually qualify for a $50, $100, $200,000 account. If you can trade, you can actually be trading big money and getting the vast majority of the profit. And the question is it real or not? And that's what my particular study has been for the last 2 years, and and it is real, and I am getting money from them every month. So I'm helping teach traders how to do that for themselves rather than struggling with smaller accounts. And it winds up that half the people I do work with on the prop trading accounts, they have plenty of money, but they don't want to risk it. Why risk it when you can use somebody else's? So that's my background. You can see I've been around. You've probably known me from my 4-minute drill for traders. If you've seen me around, that's kind of what put me on the map. I was able to express my loud personality in 4-minute clips, kind of right between the eyes. Most of it was that mental and emotional stuff, but that's what I'm about. But it's not about me, it's about you who's listening. And if you find some of the things and that I say, and my partner here says that you're going to you're going to maybe learn something or unlearn something, and and make your trading a little bit better. But again, everything I do has a bent toward making it easier to follow and therefore not jumping off your trading plan. So that's what I'm about.
Yeah. And I think it's really a great thing you're doing, getting people prepared to see if they could do the funded trading, because again, if you could do funded trading, I mean, for so many people that would be effective, either because they don't have the resources, or like you say, they have resources, but they're over 60 or whatever, and they don't really want to lose their resources. So rather than that, let's see if they're any good at it, or develop yourself to be good at it, and then see if you can get funding, keep the majority or a lot of the profit, yet don't have any skin in the game as far as, if some force majeure happens, it's not going to be your hit. You know what I mean?
Yeah, actually, and you mentioned skin in the game, and it's I wrote a piece called "The Death of Simulated Trading." I believe 4 or 5 years from now, if I'm right about what's going to happen with the growth of this prop trading, that simulated trading will be almost a thing of the past, if not eliminated. And I mean, why would somebody go not prop trade, but simulate their trading, feel good about it, and then jump right into their own risk? That's a big hurdle.
Yeah, your point, Norm, is get good with whatever program you're working with, and then get funded with other people's money.
That's right. I mean, why put an interim step in there? And it's these prop trading firms don't make it easy. They make some rules that really only strong professionals go by.
Yeah.
And
like carrying it overnight, or how many positions you can do, and all that kind of stuff.
Well, right? Most of them don't allow you to carry overnight. No, one thing that I talk about, and I'll say it real quickly. If I was in a trade where I started a $50,000 account that I was just funded. Right. If I put on a trade and a position and it's up $1,000, and all of a sudden my open trade equity is 51,000.
Right.
My open trade equity is $1,000, and I don't take it. I let it come back down, and and it's a break-even trade. I'm still at 50,000, haven't lost any money, but the red line that is in every trade, in other words, with a $50,000 account, you've got to make $3,000 before you lose 2,500. And in my example, if I let go of that $1,000 open trade equity, all of a sudden that red line is $1,500 away, not 25. So they count open trade equity against you.
See, these are the nuances that going to you makes a lot of sense, because a guy like me who might be interested, I wouldn't know that. So basically, this is the kind of deal where you make money and you take money. You don't let winners turn into losers. You're much better off cutting a winner short a little bit than it would be to let it reverse on you.
Well, you'd be a damn good student, actually.
Well, I'm trying to cut, I can process things pretty quick after 40 years.
Yeah, well,
and I'm processing how this works. And I think it's a pretty attractive proposition.
Well, let me give you the next step. What I advise traders do, and part of the course to get around and actually make some of these negative rules into positives for you, is actually always begin a trade with at least 2 positions. This way you can treat one as a scalp, as a day trade or a runner. This way, you don't have that dilemma. You know?
Yeah, no, that's a good resolution for it. That's good. All right, we're going to block off time at the end to get into that greater. Let's go into the markets. We'll start out with the question of the week, is going back to the first time we did these things. What is the S&P going to close out on Friday? We opened it up at around what was it? 43.85. I don't know. Did you know where we opened on the S&P?
Yeah, it looks like somewhere around 43.87.
Okay, so let's call it 43.90. Okay. You think it would be higher or lower by Friday?
I think we're going to be slightly lower. Yeah, but pretty much in the same, 20 points one way or the other.
Yeah.
And I'll be explaining why I think that in a second.
The numbers, I thought 44.25 was a big number this week, and probably 43.50 is a big number. So that's kind of the window you're thinking.
Yes. In fact, the lines on my chart pretty much explain why. But yes, that's the number. I think, we've had, I'll tell you, they hype the news, whether it's politics or anything or CNBC, but to keep flashing that the market had 5 days in a row, you'd think it's crashing. 5 days down in a row on the S&P, you'd think we were really under pressure. But it's a very normal chart. We'll go through it in a second.
Sure. Okay. Well, with regards to which markets that you'd like to look at first, you want to start out with S&P and
let's look at this
on that one.
Yeah, I've marked it up a bit. You can see that, okay?
Okay, sure. That's the upper right-hand corner here.
Yeah, this
There you
is
go.
a daily chart of the S&P,
Yeah.
and I wanted to just mention a few things. This right here is the 8-bar exponential moving average, which is something that we use in our loaded gun trading plan, which is the one we use for prop trading. Some people call it the golden average. There's a lot of the 8 and the 9. It's got enough days to give you a somewhat of a general sense, but it's short enough to
Be
be on
sensitive.
top of it. And the fact that
Yeah.
you're using an EMA, an exponential moving average, means that we're weighting the current months a little bit more than the current candles, more than we are the candles 6, 7, and 8 more than 1, 2, and 3. So I like that as a, don't worry too much about the white right now. That's something in the position that of another discussion. But I think you can see that, this chart here goes all the way back to the beginning of the year. And it's just, it's a beautiful chart, really. I mean, if you look at it, the more recently, what I like to do is I draw the first line, which is this trend line here. And then the first thing I'll do is copy that trend line so they have the same angle, and I drag it up here. And it's amazing how nicely this parallel line fit. This is about, you can't get much more perfect than this market. I mean, even the RSI, it has a beautiful slope. The market is not doing anything contrary or other than what you think it will do. It's been acting
Orderly.
unbelievably orderly. I mean, just so other markets have not been, but this has, and you can see us just moving nicely through this whole this tunnel here, and I expect it will continue to do the same. If you've seen the decrease here in the RSI, the momentum has been moved from relatively high. Some would consider 80 is oversold. This is in the high 70 region. I consider 70 as a point. That's where this line is that you got to kind of consider that you may get some stoppage. And it just worked beautifully right up to the trend line. And now it's been coming down, even though the momentum has seen some swift deceleration here. You're not really seeing these small candles are resistive candles that are forming, and therefore I just don't think that we're going to do anything other than continue what we're looking at here. And
Yeah.
what was that bottom line that you talked about? 43.25, somewhere in there.
Yeah, 43. Actually, there's a 43.25 if it got slipping. One thing
Yeah,
I wonder,
and
you were kind of a big proponent or a believer in Seema's work with the RSI.
yes.
And I have great respect for her. But I have found that the divergence on RSI is also very important. And if you notice on your was it the 13th of the month, I guess, you were up there near highs, and then RSI was really lagging. And then once it goes underneath your moving average, the yellow line, you got a very high probability thing that it's coming down, because it's obviously run out of steam up there. And now you actually have the yellow pointing down. So, I have found that a combination of moving averages and relative strength divergence, which I'm trying to spread the word on, is not a bad thing. And even on the upside here, around the 20th or 27th, you clearly are getting your yellow line turning up. And look how much higher the RSI is, even though the markets are somewhat near the lows. And so I think combining a few things there, and the stuff you got there is fantastic, because you'll generally not make much money unless that yellow line's rising if you're bullish, and you probably won't make much money on the downside unless that yellow line is pointing down. You'll see a few squirmies here, but there's not big money there as much as when it actually turns up or down, huh?
Well, I mean, the idea of combining those two, I mean, the best indicators are watching price and momentum, and you just done it in a different way. But you're kind of forcing me to define what this line is. This is the 34 EMA.
Okay.
I call it a backstop, and you can see how it's moving right to your price here.
Yeah.
And you know, what happens with a lot of times with this backstop, you'll see the market try to reverse, it'll reverse on the 8, but it'll have trouble maintaining, if the market is strong, in this case on the upside, it will poke it, but come right back up. And you can see where it's done that a number of times on the 34, which is really part of what makes this whole thing impressive. This right here, this is one of my favorite triggers. It's one of our main loaded gun triggers, and I call it loaded gun because this is the barrel of the gun pointing higher, and this is the trigger. It's a combination where you have indecision on one side of the 8, indecision on one side of the 8, featuring a small body or a doji would be the best, of course, but this is pretty small, followed by a definitive move crossing the 8 and giving you new direction. And so in this particular case, we were challenging the backstop, the 34.
Mm-hmm.
We came right through, and we came across a line that everybody's drawing, and you know, which really caused this whole accumulation as we attempted to get through this double top area. But
Yeah.
once we broke through, so here's where you would look for that breakthrough, and you have it here. One could have gotten long here, and you know, done very well here just over the last couple of weeks. And now we're seeing a corrective action with the smaller bodies, less enthusiasm. We do have, this is not a trigger here. I like a little bit more difference between the two. Here's another, you know, here would be another trigger where you have a small body and a movement down. You can see the nice follow through. Here's another one here. We have a small body and a nice follow through down. So it's, you know, this is just nearly the perfect movement, almost as predictable as I think you and I are going to be able to get.
Could you explain now, small body, does that mean the range that day was quite tight, or does it mean volatility was tight?
Well, it means not the volatility, but it means, yes, it means that that there was indecision on price movement in that particular. This is the 5-minute chart I'm looking at here. I'm sorry, this is the daily chart. So the beginning, and I don't. When you're looking at this, I ignore the wicks. The Japanese were very clear. The farmers that started this whole candlestick thing, they paid very little attention to the wicks and felt that the open and close were the really only true important parts of where it ends up, where it starts off at the end of the day and ends up. Those are the main features that you should be looking at. So when we have a small body like this, followed by a decision, especially, you know, after we've breached this 34,
Right.
you've got a pretty good pretty good sense of where the next move will be. I mean, the fact that listen, when you have an accumulation like this, there's a lot of interest on both sides. You've got a lot of people multiplying their longs and a lot of people multiplying their shorts, and they'll try to extend this as much as they can. But when it starts to break out, this is what happens. It goes up nicely with nice sized candles, and now you know, some doubtful pullback that is just very, very orderly, probably will pull back to this area, so that my prediction, quote unquote, of a market that ends here probably take 2 or 3 more days in this area, and look to challenge that number that you talked about, the 45.24, 43.25. And if it breaches that, maybe it will hug this line. But you've got a lot of places here to look to go long. So that I've been holding my powder, waiting for a trigger to get you long. You just don't want to jump in long. But that's how I see the S&P market. I just think it's nice and orderly right now. If you stay away from the news, it's all very clear. Anyway, you still with me, Jim? I don't know if I've got Jim with me, or I don't know if you can hear me. There's a chat, there's a hello. Are we all good? I'm going to stop the share just for a second. and just make sure that Jim is here with me. No, okay, he's dropped off, so I'm just going to kind of continue, and I know he'll be right back. I must have insulted him in some way, but maybe not. All right, let's continue on. I think David, you're probably there.
Hey, yeah, I'm not sure what happened.
Okay, I'll just.
Of course, I stepped away from the thing for just a second, and then
Yeah, it could be. It always happens then. So I'll just continue on. We talked about looking at the Japanese yen. The Japanese yen is a market that I like to trade, and I think that if you're a currency trader or looking for, if you have a smaller account, the fact that every penny move in the Japanese yen and the euro dollar, for that matter, is I'm sorry, this is the natural gas. Let's go to the Japanese yen. Here it is here. It's only $125 per penny, so you can take on those two positions that I suggest that you do, especially if you're prop trading. But you can see that that the system that I've talked about here with this with a small body followed by a movement through the 8, you can see how that resulted here. You can see a nice result here. You can see this went sideways. Looks like a break-even type trade. Here's another chance to get short, but I don't like to wait any more than 5 or 6 candles before I decide that I've wasted my time. When you have a trigger, know that that the further you move away from the trigger, the less that trigger has an influence. So I like 5 or 6 candles. I would have been out in this area with a small gain or a small loss. But you can see here how that formation, that lack of direction in a small candle, followed by even if it just pokes its nose, in this case below the 8, you're going to see some follow through. And that follow through is usually, believe it or not, at least the size of the candle. Of the extension candle. I'm telling you a lot here, but I want you to consider what's going on here in the Japanese yen. I want to see if I'm going to get a daily chart. Is Jim back?
Yeah, I am back. And yeah, I did want to chime in on that Japanese yen but you go on with what you're saying and showing, but I definitely find it to be a very interesting thing to look at right now. That's for sure.
Yeah, the thing about the Japanese yen is it you know, look at this 34 here, how it just allowed. And when I talked about the big candles defining the overall move, you can see all of these big candles with shy, you know, on the way up with shy corrections. And then now all of a sudden, when the market turns, you've got a major, and here's that signal that we talked about. But just recently, you can see, you know, how sick this market is from a price standpoint. The market just continues to go lower, and you know, the thing is that an inexperienced trader will take a look at this and say, well, it can't go, you know, because this chart is only this far. They'll say, well, look, it's you know, they're not doing much. They're not going past that. But the idea here is that you got to stick with the trend. Lower markets will move lower most of the time. It doesn't really matter until you have a signal to go to the long side. And in this particular case, we came all the way down. And you see this? Here is that signal again, a small candle, a very small indecision for this day, followed by a day that showed some power through the 8. And look at what happened. It actually defined this next leg up. Now, of course, if you can even see this line right here. If you draw this line, it's going to come in right in this area. So when you take a trade like this, you want to define the potential. And these, you know, these lines, like, let me draw it real fast. There's the drawing tool. Let's do a ray. You can call me Ray, and you can call me. So you can see that even if I just took the 2 peaks, you can see that we're challenging this. And I bet you if I drew this parallel line, and I'll do it kind of a cheap way here. Let's see if I can find the Ray. So just, that's pretty close, but you can see that if I brought this down, I mean, just amazingly orderly, another orderly market. So to look, at the beginning of the day, I just shorted this, and I've got a nice position on right now, just looking for it. Actually went against me. Now it's coming back. It's pretty safe bet. Look at all, we're dominated by red candles, which means intraday you're seeing the low, the market close at a lower price than it opened. Counter to this, you're seeing this, the opposite, with mostly green candles, mostly red. But when you see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles and 2 of them are green, you don't want to be buying this market until such time as you get a signal. So, but what I said in the beginning while you were gone was that it's important to, I like this market because although it's the same $125 per penny move, it's a lower basis than the euro dollar, and therefore the same percentage move is not quite that dramatic. So anybody who's starting out trading the currencies, I love the Japanese yen because it tends to do what we're seeing right here. It tends to give you a nice trend, a nice direction to go by, a nice place to get in intraday when the market is trending. So anyway, that's my wrap on Japanese yen. I'll be looking to short this until such further notice.
Yeah. And as I look at the RSI divergence, there is absolutely none in either the 20-year graph, the 5-year graph, the 1-year graph, or the 1 month, which tells me that you're probably going to get more action on the downside. But the 20-year graph is telling me you're within earshot of 20-year lows. So my personal opinion would be after you do get any kind of a flush, get your buy hat on if you get a divergence, which means it goes down to those lows and it does some activity down there where you can get a couple of different RSI readings. And of course, if the one low has RSI at 27 and the next time it goes down, it's 39, that's your divergence, that's your buy signal, and get long. But there's no evidence of that here. And so the sell side would make the most sense at this point.
Yeah, and I want to, while I have this here, I just want to stress out there the importance of position sizing. And with the advent of the micro accounts, it's easy to understand the why of what you're doing in the trading plan, and use that to determine your size. I'm going to just zoom in on this particular. Well, we could go here or here, but this kind of, when you see we have a cross in the moving averages, we're right at the top of the this. Actually, this is the one I wanted to look at. This one right here is the signal that I talked about. Now you see this is a long signal here. In other words, here, but you would not take this signal because it's up against the guardrail, and there's not enough room to give you your scalp. So this and this happens often, where you have a reversal signal like this, where it doesn't quite make it. You have another, what I call a hesitation candle, followed by an extension candle. This is a high probability trade for a number of reasons that we've talked about. We've already identified the fact that we're trading in a tunnel. We've already identified the fact that the 34, which incidentally is a Fibonacci number for those that haven't put that together, and that this is it's kind of a universal truth number. When you look at how we've maintained the integrity of that, and when you have your signal, your intro to a trade against the backstop after a failure, crossing the 8. This is a trade that is likely a near maximum trade. So if you were trading the micro, well, let's see, in the Japanese yen, there are half contracts, but even in full contracts, if I can take, even in a $20,000 account, I can take 3 or 4 positions pretty comfortably. This is a 3 or 4 position take because of the confluence of all of these indicators at the same time. Plus, you've also had, I don't think this is a divergence here, but you can see how we have not. This is very
weak.
It's very weak, and it's
That's a good
just
word
continuing. Yeah, why didn't I say that? I do want to stress to people to study a little bit about position sizing, because I think it's a lost art. And I used to run 60 traders on the floor in options actually, but on the floor, the room we were in, it was an office, but there were 60 brokers there, and trading for their accounts on their own systems. And it was my job to make sure that these systems continued to honor the client and make the money and were were viable. And those traders that had a sense of when to go, when to push the button,
Yeah.
the full button, and when to sneak into a trade, because it looked good. I mean, this looks pretty good right here.
Mhm.
Another good, but look at the risk. You've got a lot more risk because my stop is above this area, and you've got a lot more. You've got a lot less risk here than here. So this would be even though it looks nice, you're already halfway through where you want to be, and it's against the.
Now, in this particular case, no, Norm, would you see if you could get a rally towards 70.67 or 70.88
in
or
here?
71.52 to try to get a better entry level, or what do you think?
You mean the current?
Yeah, the current. In other words,
no
I have some
it.
numbers that look like 70.67, 70.88, and 71.52 would be formidable resistance.
Yeah, I think, yes, certainly you would be on the lookout to maintain this. I mean, these lines are not perfect, but if you're you're getting close to the edge of that line if it's not already breached. But the idea is that here you would be looking for. You can't move until you have your trigger.
Oh yeah.
The thing about this is another thing that I think a lot of the new traders get wrong. Yes, this is going to be some support in here, and I agree that I would be looking for a trigger in here for the next rally in order to. But I think the rally will probably be shyer than the ones you can see. We're getting this. We had this rally. This one was pretty feeble, and this one maybe even more feeble. But when the market exhausts, it's going to exhaust, and you'll have that movement down to some of those numbers that you talked about. But you've got to wait for you. The other thing is that when you break resistance, resistance or support, those are the times where you can get big runs. So you want to wait for your signal to get back into a tunnel in this particular case, and then when you get into the tunnel, back to the trend. So you got to wait for that signal. You got to be patient. And I think, as I mentioned, the mental and emotional part is what we did exclusively. Now we're doing it with the prop trading. But the idea is that of all the things, fear of losing, over trading, revenge trading, FOMO. It's patience. It's the lack of patience that we probably have more testimonials. We do have more testimonials on thank you for helping me with my patience. It's really turned my trading around than any other one facet. So know your triggers, know the why of your trading plan. And in other words, I can give you my trading plan, but unless you know why I've constructed it, and why a trigger is a trigger that I've explained a little bit of it, why the 8 is better than the 9, why the 34 is better than the 50 in certain trading. Knowing why is important, because when you have 2 or 3 losses in a row, 4 or 5, and any good trading plan will have that, you'll continue to have confidence and continue to trade knowing that the long term is set for you. So patience is huge, and that's part of the answer to the question. Got to be patient here, but boy, my expectation is that somewhere in this area will. And Tuesday is a counter day, so
Tuesdays and Thursdays tend to be reversal days, right?
Yeah, so tomorrow will be tomorrow should be very interesting. So.
Yeah. Now, the back story here is that these guys actually like this weak yen because it puts a little inflation into their system, which they've never had. And it also makes their exports very, very cheap, which is obviously one of the reasons guys like Buffett are loaded up on Japanese stocks. So this is probably not an exactly unwelcome thing to them. But now that I see it's breaking near 20-year lows, they may call the dogs off at some point, right?
What is 20-year lows? Do you have that number?
Yeah, I do. I happen to have it right here.
68 area?
Yeah. The 20-year lows is near 65, actually. 65, it's 60. Yeah, 66.
Yeah, so we've got some distance where it looks like we're,
Yeah.
400 points away, which
But you
is,
have a potential reversion to the mean when you get down there, because a lot of the moving averages on the longer term graphs are up at 75, 80,
Mhm.
85, 90. So that's why I would be looking after we get a little bit more flush, after
Mhm.
we see that big divergence where the market goes down and the RSI goes to 15, it goes on a bounce, comes back to the lows, RSI's at 39. Now we know it's exhausted. Now we know that the volume is dried up, and now you got a good shot at a good bounce.
yeah, and
I'm
it
not-
often, and your experience would tell you, is it tells me that these flush outs can be very dramatic. The distance from where we are now to the 65 low is really just about this distance right here, the same distance as
Oh,
here,
yeah.
which is very interesting, because generally when a market breaks below a tunnel like this, it usually, you can look for this distance. And so, that I think it's really setting up perfect for what you've been talking about, and maybe challenging that low, but we'll have to see.
And believe me, you have to have patience. So I'm
Yeah.
in the, I have, the periscope up, but I'm not shooting anything, I mean, I'll tell you, like on a Tesla, I let that thing run. It went to 275. There was a big divergence up that neighborhood. Do
Mhm.
some short-term weekly puts on it. Same thing with Estee Lauder. Went way down towards the lows. Had a nice nice divergence down there. And Estee Lauder went from like 170 to 200 in like 2 days. So
Wow.
when they are done, they turn. And
Mhm.
when they turn, all these people that are short, all these people that are out, when they all want to get back in because the tide has changed, the guy who's making the market down there, what he's going to do? He's going to raise the offer to the ceiling, because all he's got on his books is buyers.
Absolutely. I agree.
I mean, people don't
Yeah.
understand. It is a marketing. There is buyers and sellers, and if one side is crowded with algos and everybody else, the guy who has to perform the market on the other side, he's going to make that bid very low or that offer very high, so he can take everybody in, knowing fully well then when this volume is all filled, and there's probably nothing behind it, the market will reverse on its own weight, and he'll make money.
Mhm.
It happens. It happens all the time.
Absolutely. Yeah.
And it makes sense, because nobody took a vow of torture to step in front of a freight train. If they say 9 million to buy, nothing to sell, he's not responsible to throw his checkbook into a fireplace.
Right. And you can't take an oath of celibacy either, otherwise you'll never get into anything. But this is
how about would you want to look at a couple of other markets you see? I mean,
I just brought up, this is the crude market.
Yeah, that's what I was going to say. Yeah. What are you, because
What
it
a
seems
mess,
to me
right? It looks like a mess,
but it's very defined resistance, don't you think?
yeah, it's a mess, but it's really not a mess. But look at some of the things that we talked about. First of all, the loaded gun trigger. I mean, you've got a trigger here, you've got one here, you've got one here that resulted in this. You've got this trigger which resulted in this. I know every time I'm on, I show you this. It's amazing, isn't it? Look at that. Here's another trigger here that resulted here. When you see a tail like this, I mean, this is, of course, technical, this hanging man bastardization right here. This is a hanging man here, but this, when you see it, tails check, this is pretty strong that whatever this down movement is over. So whenever another thing is, if you're working with moving averages, that doesn't matter which ones you are. When you pull this far away, especially against, what you're doing here, you're testing this, you're likely to snap back. A seasoned trader would have taken their profit somewhere in here, or at least part of it, or most of it, because when you get this far, I mean, what is a moving average? It's an average of what the price has been over the course of, in this particular case,
the mean.
eight trading. Yeah, it's a mean. So when you pull this far back, and you're testing a low like this, and you're seeing, of course, look at the couple of things. This is where all the new traders they put their stop right in here, and they get taken out, and only to see the market come right back. So you're better off trading small and thinking big. Okay, think as big as you want, but trade small, because the power of leverage is it's like the compounding. People don't realize the power of compounding over years. They don't really realize the power of leverage. This kind of thing this would have been a nice profit area after this big run. But here's another trigger to go long, short, of course, against the backstop, and it gave you at least your nice scalp here, and has run into resistance here. You notice I put this by the body. I drew this line below the bodies, which can be, I usually draw two lines when I do this. I draw the line for the body, and I draw the line for the wick. And this is usually, a lot of times a range that the price will play in before it reverses. I like to look for reversals in this area. But boy, this just has not, we're in a trap right here, between here. And I do want to, of course, you have nothing to do really but to possibly consider trading within, and of course options is such a great way to do that. To trade this to trade this distance here. I mean, this is pretty good. This is $8, which is a nice place to be trading options if you can find the turnarounds here. In any event, I wanted to mention that when I see a accumulation like this, I take out my protractor, my compass, and I put my pin. If this market were to break one way or the other, you're looking for it to break one way or the other. And of course, this looks like it's probably going to break lower. We'll see. But patience, right? You put your pin here of your compass, and you spread that compass, and you put the pencil over here, the beginning. So you're looking at, you span the accumulation. You leave the pin here, and you swing that pencil all the way down here. This is going to be the target. You'd be surprised how well this old tried and true indicator works. I can't do it anymore because I ruined a monitor by sticking my pin into the monitor one time, but true story. And don't ask me why I did it, but I thought I could do it without actually hitting the monitor. But in any event, this will give you an idea of where this accumulation will go. But right now we are trapped in in between the two.
It's and the shares are going crazy today on the upside. Both the XOP, XLE, and OIH, which are the integrated as well as the servicers. So it seems to me that on the crude, if it can kind of and I noticed the RSIs are holding 40. And I don't know what SEMA's view on that was, but my view is if you were above 40, 50, 60, and you come down and it can't get under 40, because under 40 is when you can accelerate to the downside. So that 40 number holding up on RSI on crude is interesting. And of course, holding up that 66, 68 area is interesting. It just needs to get a 72 number and a 74 number to get a little momentum going. But the energy shares are acting as if that will happen today because they're all up better than 2% on those indexes. So we'll have to see. But and then there was some news about Saudi supplies, boats being out in the water, 2.5 year highs on how much oil is out there in the water. And then, but there's an 11-month low on the transit of energy. So there's a lot of different news bouncing around out there.
Yeah, HEMA usually, I think HEMA's numbers are 35 and 45. She'll put a band in here, and listen, you don't have to be a soothsayer to see that this, it's its own channel, and so really nothing to do here except for to play the band until further notice. Really, I mean, we tried it a couple of times, so we'll have to see what happens here. I see something in the chat. I don't know. Do you find that you get more slippage when using market orders? That's a good question. Because I was looking at some of my logs from years ago, and I'm talking about 10. Slippage is not the problem it used to be. If you most of these markets, especially in the currencies, and in the larger markets like the crude oil, I find I'm not worried about slippage when I go to the market. I go to the market because I'm worried about not getting in. I can't tell you how many times in the early days, really the first 10 years, where I I was taught by a very smart guy, to put in limits when I'm buying, and
That's
he had
right.
his way, and
You play the prices right on the way in and when you're coming out.
yeah, and it's just that if you're fast enough,
Yeah.
and if you're skilled enough, and I actually have my finger on the button pressed down, and I know that when I let go of the mouse, that's when the order is going to take. And because I always trade based on closing. So if I was looking to go long here, I would have I'm waiting for the close. I'd have my finger on it at the market orders. As soon as that first trade happened in the next bar, I would be lifting my finger and getting in at the market. I've just missed too many trades.
Yeah.
I'm willing to pay a couple of extra ticks in
But
order.
you definitely think we are at a very important level here, because from my long-term stuff, this low of 63, 64, and then up towards 66. I mean, if we were to if you started seeing a 50 handle on crude oil, I mean, that would be very significant, and it could lead into something very weird happening.
Well,
if not, you're looking at the bargain of the year.
Yeah, I generally, again, I trade based on what I'm looking at here, because I'm out at the end of the day most of the time. But
okay,
there's a lot of fundamental things going on in this market. One of them is the idea of loosening up the fracking in the United States.
Right.
That there's a lot of underlying buzz about us really opening the frack gates, because we have enough energy, oil from fracking, that we could be the new, we'd have plenty of oil for ourselves and plenty of oil for to export. It's just that fracking has its issues with the environmental part of it. But I think that if Biden is looking for a way to encourage the economy, it would be lower fuel prices. And so
that might be the instigator to get us through the 64, 66 number and get a 50 handle, if in fact they went that route.
Yeah, I think so too. And certainly that would help the inflation situation. I mean, the great thing about this inflation run that we've been having, as far as Biden is concerned, is that it started a year and a half ago. People, a year from now, things could be a lot different, and all you're going to hear is how the administration has whipped inflation now. Remember, who was that? Whip inflation now. Was that Carter? He didn't really do a good job on that, but. Do you remember that expression? Win?
That probably was the 19 something. What do you call it?
89
embargo. Oh yeah, the thing around 80 when the oil went nuts and everything else.
Yeah, right. 79, 80, right. That was the Hunt brothers, right?
There you go.
74 under Gerald.
And then there was an embargo.
Whip inflation now was a 1974 attempt to spur a grassroots movement to combat inflation in the U.S.
That worked real well.
Right. Just in time for Carter.
Look what a house cost in 1974 and then now, right?
Yeah, that's in any event, I guess that shows that I have been around for a while trading, if I remember whip inflation now. But yeah,
a little history lesson. I hadn't heard of that either.
Yeah, I wonder why you were here, David. I know it's your site and everything, but hardly when you.
He's like the Wizard of Oz behind the curtain. You know what I mean?
That's it.
All right. I don't want to. Hey, listen. I want to give you some airtime here to explain to people how you help them prepare themselves to possibly be a funded trader, because I think that's a very interesting thing. So walk us through. If they call you up, and then what happens next.
Yeah, there's a URL. The URL is theirmoneyyourprofit.com. So take a look at that page. There's usually a chat area in the lower right if you want to. If nobody's on the chat, you can leave a message and I'll send you some information on it, more than what you'll read on the site. If you have any questions, actually, I'm probably going to man it for the rest of the afternoon. I kind of really like talking to traders, and it's a great way to do it through the chat. So theirmoneyyourprofit.com. profit.com. I just think that, these restrictive, I mean, how can they be doing that? How can they give you 90 to 100% of the profit, 100% in the first 25,000 and then 90% thereafter? I mean, where do they make their money? Well, they're making their money on the 90% of traders that try to qualify, but don't. There's a monthly fee, and that fee is anywhere from $17 if you catch one of their specials to $300 or $400 if you're trying to qualify for a $350,000 account. Just a tip out there: if you're going to do this without me, or if you've been considering it, take the $50,000. I like Apex and I like Top Step. Why do I like them? They've been around the longest because there's a lot of fly-by-night. Listen, it's an attractive offer saying use my money and I'll give you all the profit.
Right.
So there's just a lot of charlatans out there.
Seductive.
Yeah, I mean, they paid. I know Apex paid $8 million in the last couple of months out. I got a little bit of that, not all of it. But the idea is that you got to go with the large companies that pay out.
Mm-hmm.
But they have rules that are restrictive to kind of get you to start thinking like a more professional trader. They want winners. They keep on, every time I request money and get it back, they send me an email. Can you talk about your success? They want me to draw in, and anybody who's been getting checks from them, actually straight into your account. They want you to advertise for them, tell them how great it is, so that they can attract the 9 out of 10 that are going to just pay them fees every month. So it's a great business model for them, and it's a great business model for you if you start to get serious. And part of that getting serious is you've got to start considering this as a business. Consider your trading as a business. Once you start doing that, I say start with a small account like 50,000. Okay, right. And because when you do that, it's a lot easier to qualify. Therefore, a lot easier to get that first
initial hit.
Yeah, because once you go full circle with something, it's true of anything. It was true of my tennis game. It was true of my once I realized how to have a spin second serve, my whole game changed. Right. I had to practice. So when you practice passing the evaluation for something like Apex, you do it, and then you've got to maintain the real account. You can't bust out that account either. They're very, right. The drawdown is limited. Go ahead and make that happen so that you can start bringing the money. And then you start realizing, hey, if I had 5 or 10 of these $50,000 accounts, that could be interesting. I could trade them a little. So how do you do that? They have things called, I just bought it recently. It's called Trade Copier, where I can put on a position and I can put it in all of those accounts. Now, why would I do that? Why would I want 3 $50,000 accounts instead of $150,000 account? It's because if I think like a business, I want to have multiple streams of income. So I may trade 2 in one way and 1 in another. And this way, if I do wind up busting out one of the $50,000 account, I'm still getting income from the other. So when I deal with people on this idea of prop trading, it's important to take a long-term income view of this as a business, because they've really set it up like that if you can get past the rules. And what I've done is I've created a trading plan that has done that for me and for others that have used this version of Loaded Gun that allows you. I've shown you the trigger, but it's, there's 2 things you have to do. You got to get in and you got to get out. So I've shown you a little bit of one of the ways we get in and how consistent that can be, but getting out is, is just as important. So, I just believe it is part of the future, especially for small accounts. Why be trading a $500 Forex account or even a $10,000 or $15,000, futures account? If you're retired and that money is dear to you, why not trade their money and do it right? Because the learning experience from that, it doesn't take much to make $3,000 on a $50,000 account and start getting that income. So it's exciting, and I'm really I've got a lot of retired guys that are into this with me, and we meet in fact, we're meeting on Wednesdays. Anybody that got in now, every last Wednesday of the month, all of us meet on the Zoom, and we have all our little boxes, and we share ideas about how we're doing on the prop trading and some of the things. This 34 was not in the original plan that I built, but we have his name is George Fee. I'll put him out there. I hope I'm not, but he is a accomplished concert pianist. I mean, of the highest order. He's a retired. He's like me. Can't really retire. He's teaching piano to other people, but he's a stickler for trading. And in one of our meetings, he says, "Hey, listen, I've been working with the 34. Here's what I found." So I took 2-3 months to test it, and it's really increased our winning percentage from somewhere in the low 60s to somewhere in the high 60s. And that is a significant difference. So, I'm constantly learning from some of the experienced traders that we have in that group. We meet we'll be meeting this Wednesday. It's the last Wednesday of the month. So, we're all into this. We all realize the potential of this and how it can, really be a godsend. The thing is that a lot of traders don't believe it's real. How can they be making money? Why? Don't worry about that. Worry about how
They're probably letting past experiences prejudice. You know what I mean?
Anticipatory anxiety that we called it. And yeah, I mean, if you've done enough losing, that becomes your expectation.
Exactly. Hey, if you get mugged on Biscayne Boulevard every time you walk on it, you probably would stay away from that street, right?
Yeah, I know that street.
Well, I'm using it. I'm using it as a.
Yeah, I appreciate that. I thought you'd go with Barcelona on that walk, and everybody.
The Ramblers. Every time you walk down the Ramblers, you get hit.
At least, give me some credit for living down here in South Florida. Yeah.
All right. Well, Norm, you gave him the information as far as. Oh, sure.
Do you know which one is the least restrictive? I think it's probably.
Well, I'll tell you of the two. You've got the Top Step, which is probably least restrictive, but they make you pass that twice. I mentioned make 3,000 before you lose 2,500. You've got to do that twice. That's why they call their process a combine. It's a combination of passing it twice. With Apex, there's restrictive. They have more restrictive, and the main restriction is what I talked about with the open trade equity earlier. But you only have to pass it once. So really it depends on how you want to do it, but either one. And I've got discount codes for them. Right now there's a 90% discount code with Apex. So again, if you want to go to the chat on theirmoneyyourprofit.com, I'll give you the link, and you can get a 90% discount on your first month and 80% every. But listen, you don't want to be paying the monthly. After you've passed, incidentally, there's one small fee, and that's it. You're not paying monthly fees. You're just collecting money. Okay, so it's the people who pound themselves and don't learn and don't pass. So I've kind of figured it out, and with how to pass with a relative ease. So that's why I built the loaded gun the way I have. So if you're interested, theirmoneyyourprofit.com, and I'll be on the chat for the next hour if you want to hang out with me there.
Yeah, like I say, it's a very interesting subject, and really talking to you directly is the way to go. Same thing with what I'm doing at Option Professor. This RSI divergence I've been using, very, very effective. But the most effective thing to do is to talk to me directly. So contact Norm personally so he can explain it to you personally. Go to the website to get the basic information, of course. And with the Option Professor, go to our website, optionprofessor.com, to get our basic information. But don't forget to contact me directly so I can walk you through how the RSI divergence works.
It's optionprofessor.com, right?
Yeah, optionprofessor.com. I use moving averages. I use reversion to the mean, and I'm using this RSI divergence. And I'm telling you, I'm very, very pleased. And I've been doing it for 40 years. So I've seen a lot of things come and go. These things I just mentioned, in my view, are quite effective that for me. So anyway, I share it with you if you contact us, and I think there's value there. And I definitely think there's value finding out from Norm if and how this funding of trading things work, and see how you can do in it, and see if it's right for you. But you're not going to, you're never going to know if anything's right unless you reach out and let the person explain it to you.
Well, that one-on-one is key. It's interesting. What I didn't mention is that anybody that purchases Loaded Gun, the first 90 days, you can have as many one-on-one meetings with me as you want. And
Yeah.
what actually happens is I'm lucky if I have 2 meetings with somebody, 3 meetings on the
Yeah.
outside. Most of the time it's 1 meeting, because when you have a simple trading plan that's
Right.
with good videos, you really don't need a whole lot of coaching. And so, but I love to listen. I've talked to you about this. I love to talk to traders and do as much.
Oh,
as,
sure.
you know.
And we've been doing it for decades. So we understand how to take the complex and make it understandable, because that's been our job for decades. You know what I mean?
That's it.
Yeah. All right. Well, thanks for being here, Norm. And we hadn't talked in a long time. So thanks. Great to be with you. And hopefully we'll do it again soon. And I'm going to roll this over to David now.
I remember him.
Yeah, the what did you say? The wizard behind the curtain or something?
That's right. The Wizard of Oz. The Wizard
Hey,
of
don't get cocky, David.
All right, thanks, guys. Yeah, great discussion. So if you liked hearing from Norman and the Option Professor, the next big Synergy Trader event that we have planned is coming up in about a month, and it's going to be all futures and options trading. So that's going to be July 25th, 26th, and 27th. So we're calling up the Derivatives Conference. Be sure to mark your calendars. Again, July 25th, 26th, and 27th. We're going to have probably 30 total presentations all about futures and options trading. So be sure to join us for that. And that'll be on TimingResearch.com. Of course, you can just come to the site any of those days while we're live. You can get right into the room that way. And so just a reminder, be sure to subscribe to Timing Research on YouTube as well, and your favorite podcast app, and also now on Substack to get access to all the Timing Research updates. And just want to thank my guests again for today, Norman Hallett of eDisciplineTrader.com and theirmoneyyourprofit.com, and also the Option Professor of OptionProfessor.com. Thanks, everyone.
Thank you.
Thank you. Take care, Mike.